All right, let's pull back the curtain on what's really going on in the global financial markets. There's this hidden engine, a force you almost never hear about on the news, but it's the absolute key to understanding why everything from stocks to real estate moves the way it does. So, what actually makes your investments go up or down? We hear it all the time, right? It's all about interest rates. But you know what? That's not even close to the whole story. There's something much, much bigger at play. Yeah, the common answer is always interest rates. And look, they matter for sure. But focusing only on them, it's like staring at a light switch and completely ignoring the massive power grid that's actually making it work. They're just a tiny piece of a much, much larger puzzle. To really get this hidden force, we need to understand one simple but crucial concept. It's not just about the total money supply out there. What really matters is liquidity, which is all about how fast and how easily that money can flow through the system to buy things, to buy assets. Think of it like this. It's the difference between a stagnant pond and a powerful, rushing river. And that brings us to the big reveal. The hidden engine of the markets is a force called global liquidity. Just think of it as a rising tide. When that tide comes in, it lifts all the boats, and I mean all of them. So what is it exactly? Well, in simple terms, it's this giant worldwide pool of money, all the cash and all the credit that's just sitting there, ready to be invested. It's the fuel for everything, from buying a stock to funding a brand new company. A really great way to picture this is to imagine the financial system is like a giant set of pipes. Global liquidity is the water pressure inside those pipes. Now, what happens when that pressure gets super high? That money has to flow somewhere, and very often it gushes right into financial assets, pushing their prices way up. Okay, so if liquidity is the fuel, where does it all come from? This financial water pressure really comes from three main sources. Let's break these down real quick. First, you've got the big players, the central banks, like the Fed. They can inject money directly into the system. Second, and this is actually the biggest source, you have commercial banks. Every single time a bank issues a loan, poof, they're creating new credit, new liquidity. And third, you've got this thing called collateral. Think of this as the grease for the whole system. The more high-quality assets like government bonds are out there, the more people can use them to borrow even more money, which just amplifies the whole effect. Okay, now let's get to why this is so critical. This isn't just some abstract theory, you know? The data that links liquidity to asset prices is absolutely stunning. It's a game changer for understanding your investments. Here's the real difference maker. Studies show that interest rates, they're a pretty weak predictor of where markets are headed. Global liquidity, on the other hand, is a strong leading indicator. Put it this way, interest rates tell you where the economy has been. Liquidity levels can tell you where it's going. And the numbers, they're just staggering. Take tech stocks. The correlation between the flow of global liquidity and the NASDAQ has been as high as 97%. Let that sink in, 97%. In other words, when the liquidity tide comes in, the NASDAQ almost always rises with it. When it goes out, the index tends to follow right behind. And hey, it's not just about stocks. Even assets like Bitcoin, which you might think are in their own little world, are heavily, heavily influenced by these exact same flows. The correlation there is about 85%. That's huge. Different assets also react differently. They have different sensitivities. So a 10% change in global liquidity has historically moved the S&P 500 about 13%. Gold about 15%. But look at Bitcoin's reaction. It's a massive 50% move. It is just incredibly sensitive to these financial tides. So this brings us to the most important question of all, doesn't it? What's happening today? If liquidity is the tide, what are the folks who track this stuff seeing on the horizon? Well, according to liquidity expert Michael Howell, we're seeing some serious warning signs for the first time since 2022. And keep in mind, his models correctly called the market bottom. Now they're flashing red. In his words, Fed liquidity is falling, and that is a danger sign. And you can see why he's concerned in the data. We're seeing stress pop up in the repo market, which is kind of like the critical short-term plumbing of the whole financial system. At the same time, the U.S. Federal Reserve is now actively pulling liquidity out. They're literally turning down the money tap. And that combination, it points towards a much, much tighter environment ahead. So here's the crucial takeaway. By understanding global liquidity, you get a powerful new lens to view the markets. And right now, that lens is flashing a warning sign. So, if liquidity is the tide that has been lifting all the boats for so long, the most important question for any investor is pretty simple. Are you prepared for that tide to go out?